Okay, quick Monday morning radar update. So we've got a little pop higher. We're just still in this range. Let's just go through these markets one by one for the beginning of the week. We've given the transport a level. What could turn into a bigger base? Yes, it could just go through and ignore it. The first level we put was this little ledge here, and it blasted through that, didn't it, in a day. Dow, so it's just a retrace to what I would say mean trend in a pullback at the moment, in a correction. S&P retrace to mean trend in a correction. Nasdaq approaching mean trend retrace in a correction. Russell retrace to mean trend in a correction. You know, you might look back and see this, and we don't know where the market's going, but this will obviously look like one of the weaker ones. So you could be looking at that, and it could be down there. So I'll take the liberty of just saying yeah, and there is a little level here as well. But if it just went through this level here, I wouldn't think it was that important. But if it pulled back, gave the bears their chance, and then went through that level, well, that's a different game, So a little pop through that means, that the level has only just been put in, is basically, the birth of a level. DAX, yeah, a little ledge on that. It's just, look at all this supply on the DAX, though index, the indices don't really have the same. It's more memory than actual supply, isn't it, in these shorter term products? So, like a stock, long term, it's supply. This is more memory of a level. But it's just a retrace into mean trend. FTSE 100, obviously, we know why the FTSE 100 is one of the strongest. It's quite, if you look at what it's made up of, look at the weightings of some of those stocks, look at the sectors, what are holding up at the moment. Yeah, in fact, the FTSE hitting the, basically was the last market to go bullish, and the FTSE going bullish was the start of all the rest of the markets getting weaker, and going into put the FTSE over the 250, and you'll see. So we've got a big band of resistance up here. It's just a retrace into mean trend in a bearish. It's the 250 is actually bearish. The small caps have rolled over as well, I think. Yeah, so they're falling over the longer time frame. And the medium time frame, I will say, the longer time frame here is still up. So they are in correction, but they're in, some of these are in deep correction. Emerging bears. Anyway, from that, I'll just go the all world, excluding the US, because this one's a good one. I mean, look at that. So we've got, it's a very obvious area for it to come down to. It's also a very obvious area for it to just, we at some point I know everyone thinks we're just going to get a V bottom here, because we've seen one before, and in reality, if you expect back and fill, even if it is bullish, you're probably going to do a little bit better in the way you approach the markets than if you just expect it to go straight back to highs. If you actually look at stocks, the stocks are just, I was kind of reading, about the big bouncing stocks last week, and I didn't really see much. It was just, a little bit of volatility, bounce, bit of a bounce back into a range. When you screen for the trending stocks, there are few on the ground at the moment. But that being said, it's an extremely good time to start to focus on how the sectors and that rotate in the market. Because when we know we're in a correction, yes, it could get worse before it gets better. It will get better, but it's a really good time to just get to know, stocks, and get a routine where you just screen the market every day and just look for something so you can see the stocks what are moving up, the stocks what are moving down, whatever. But I can't sort of underestimate that. If you want to know what the market's doing, stop reading news and start looking at stocks. Moving on. So we've got, what have we got? Gold. Same with this. It came straight back into this obvious area. It might come into mean trend, what will be sort of this kind of area, and even if it remains bullish, I will just say this is probably looking more bear flaggy, and it might be down here. If gold's going to make a move, gold's made a move, just the stocks haven't gone with it. So, if you're going to be, well, I'll just say from my point of view, when entering precious metals, don't wait for, just try and build a case in the stock itself, and don't just trade a stock because gold looks good. Build a, it would be easy if that was all you had to do. It's not. There's a bit more to it than that. And if we go into oil, we've just got an inside day on oil, haven't we? It's basically looks like a little bull flag here. So we'll see, and it's come back in, and it could come deeper, and it could just trade in a range happily ever after. Try and take the best if you've got money to put into that area. Try and trade the best reward to risk, obvious sort of breakout levels maybe, and obvious pullbacks, and just avoid all the noise about these things. The money's going to flow to the best reward to risk, in my view. And if you can build a case, but don't just trade on the back of someone saying, some kind of news mumbo jumbo. Trade on reward to risk and your fundamental approach. So the reward to risk being the technical side of the equation. Anyway, let's just jump through the volume leaders. Today it's 20 past 10. We should have traded 27% to be an average volume. It's not bad for a Monday morning. There's a few in here. Quite a few investment trusts. One second. So, obviously when you're looking at these investors, we've got solar, wind. Look at the sectors they are in. Alternative energy. And then into a couple of defensive kind of stocks. Kenmare still going sideways forever and a day. And PDG, we saw it on the sort of signal screens I run at Trading Basis here, and we saw it again here, and obviously we saw it on the breakout, and obviously we also saw it on the what we call the early bird setup: active low, higher high, first retrace. Simple Dow theory. Active low. Let's just go back to this. Active low, higher low, visible on a meaningful time frame, weekly at least. Higher high, above the high here. First retrace. So that was the first time we saw it. Second time we saw it was, this retrace here. Second retrace turned into a base, breakout, first retrace. The game is breakouts and retraces. The hard part is sitting on your hands until you see the actual, the good stocks trading the decent levels, the decent early signals. And into the small caps, I'll just, what did I say, 27. Let's buzz through these. Industrial metals. Obviously, you know, we've seen all these go through the screens in the last week or so. Space and people. That's still a thing, is it? Amazing. EME obviously went last week, didn't it? Cyan, deeper pullback there. Still, the trend is still intact. Very rare view for us, as we know. Travel and leisure. Yeah, not much of interest in there. Is there any actual growth stocks in there? There's a few return to profits in there. I think Gem Diamonds kind of ticks small growth. My mouse has run out of battery. Yeah, this one here is small growth. Come on. They're lumpy as well, these ones as well. So Gemfields, fantastic stock to me in the past on its previous listing. Okay, so I will leave that there. That's quite a, you know, look through the markets and, you know, a little bit on reversals. Okay.